Hello and welcome to Rajya Sabha Television. You're watching The Big Picture with me, Frank Pereira. Well, Moody's Investors Service raised India's sovereign rating for the first time since 2004, overlooking a haze of short-term economic uncertainties to bet on the nation's prospects from a raft of policy changes by Prime Minister Narendra Modi. The rupee, bonds and stocks rallied after the ratings firm upgraded India to Baa2 from Baa3 and said reforms being pushed through by Prime Minister Modi's government will help stabilize rising levels of debt. That's a one-level shift from the lowest investment grade ranking and puts India in line with the Philippines and Italy. On this edition of The Big Picture, we will analyze Moody's ratings upgrade. Joining me on the program today are S. Narayan, former Secretary, Ministry of Finance. Also joining me on the program is Ajay, former Secretary, Ministry of Commerce and Industry, and S.K. Jindal, Chairman, Investment and Capital Markets, ASSOCHAM. Thank you to all my guests for joining me on this edition of The Big Picture. Mr. Dua, I'd like to begin with you, of course. Why has it taken 13 years for this upgrade to happen?
First, we should be happy that it's happened. It might have been delayed, but India had always been, or the Indian analysts, Indian government, that probably the rating companies were expecting far too much from India. The complexities of a large economy functioning in a democratic setup and a federal democracy at the top of it probably were not being fully appreciated by Moody's as well as the other rating company called Standard & Poor's. But having said that, I think we've seen considerable amount of volatility, at least from 2010 onwards. That will be about 7 years, though the period prior to it, we had seen significant growth in the economy, and I would have expected that between 2004 and 2010, or 2011 actually, we should have even at that point of time been upgraded. The reason now why it's been upgraded now, I'm sure as we go along, you will be discussing these.
Let me discuss that with Mr. Narayan. You know, Mr. Narayan, what has prompted the upgrade for India?
I think in the last few weeks and months, a lot of good things have happened. For example, just the announcement of the bank recapitalization is a shot in the arm for the banks, is a measure to address the NPAs and to improve their balance sheets. And to add to that, the banks have enormous liquidity with.
Well, we seem to have lost the line there with Mr. Narayan. We'll try and reconnect with him. Let's not forget he's joining us from Chennai, so there is some technology. Technology has failed us right now, but taking the discussion forward, Subhomoy Bhattacharya joins us, consulting editor of the Business Standard. You know, Subhomoy, as far as the common man is concerned, what do these ratings mean for the common man?
Yeah, that's a good question. That what does a common man think? You know, let me put it this way. When you and I, supposing we go to a bank and ask for a loan, the bank looks at my credit profile, and credit profile determines what is the rate of interest that I'll get. So if my credit profile is good, I get a lower rate of interest. Well, when an Indian company post the Moody's upgrade and hopefully S&P sometime down the line would go abroad for a loan, it gets, first of all, a better paper. Secondly, I mean, that's from there's also the FDI element. I'm not getting into that, but just look at that. What it does do is therefore makes it cheaper for India to raise loan from abroad, Indian companies. So essentially, just one of the elements that it happens is it reduces the cost of the interest cost regime. Interest cost regime is something that affects lots of people. All of us, for instance, we would like to be getting a loan at lower rate. So for an entrepreneur, for anybody who now wants to, it's not that he can go abroad and take a loan, but what happens is the general cost of interest in an economy does tend to come down. And that, I think, is what the way the common man should read it. The issues about fiscal deficit, the issues about debt GDP, you know, those are things which they have an salience, obviously. There would be an impact on anybody. But to take the first point first, it makes the cost of capital as one of the factors cheaper in the economy. And that is, I think, a very major point.
Okay. Mr. Narayan rejoins us on the program now. Mr. Narayan, you are making a point about, you know, how things have changed over the last few weeks or few months, and all of them have been positive. Go ahead, please.
Right. I was saying, I hope you can hear me.
Yes,
I
we
was
can.
saying that the bank recapitalization has been a shot in the arm because it improves the ability to lend. And even though the demand is still soft, but the banks are much better capitalized, and therefore they can go ahead and lend. And there is a stability in the dollar price, also in the rupee dollar exchange rate. So I think altogether, just as my friend said just now, the cost of borrowing certainly is under control. I would say has come down. Interest rates have come down, and therefore the opportunity for growth is that much larger now than it was even, I would say, 2-3 months ago. So, however you look at it, I think this is a step very much which the country can look forward to for the next stage of growth.
Okay. Let me bring in Mr. Jindal into the picture now. Mr. Jindal, is this a shot in the arm for the government? Is this something that the government was looking for?
Surely, surely. It helps government, it helps everybody in the country. It makes us competitive, it makes us favorable to do business with. It shows our strength, it shows our endurance. Suppose in the coming time, if there is any shock or something, how sure we are to handle it in a proper way. Suppose our rating is lower, that means that we will not be that stable as we are now after this rating. So, this is a sort of branding, reliability, people can count on this, and this is how they decide which country, where, how much money they would like to put in. So, this will invite investment more, and the terms of such investments will be more competitive for us because the rating is good. If rating is not good, the terms will be different, totally different. So, this makes us competitive, and once you are competitive, that is the best situation. If you are not competitive, then it is difficult to survive even.
Sure. Mr. Dua, can we read it as, an endorsement from Moody's to some of the measures that have been taken over the last 1 year, may it be demonetization or GST?
What you're saying is endorsement from Moody's of Modi.
Yes.
If something of that kind, I would probably say the answer is in the affirmative. For after all, we have seen, as was pointed out by Dr. Narayan as well, a number of positive things happening in the last few months, probably starting with GST. And I come to GST, which has been discussed a number of times over, that it is definitely a positive step for the economy. What we are facing are the transition disruptions, which were probably expected. The fact that we get worried about it because we are constantly in an election mode in India, etc. That apart, it is in the medium run going to be a short run also, apart from this immediate disruption, going to be a positive step. Thereafter, we've seen the Insolvency Act being actually put in action. It had been enacted earlier. This is a kind of thing which kind of gives a lot of support to foreign investors, that it is possible in India to also have, like bankruptcy being declared for whatever reason, and it's a code there, and the code is being implemented. Moving on, I would think that the World Bank's recent rating, bringing India down, to the 100th position, yes, from 130th, is an endorsement in the right direction. But what worries me are a couple of things which we'll have to watch going forward, because the GDP rate of growth is a bit uncertain. How does it happen? With private sector investment being uncertainty, are we going to be relying on government incentives like the Sagar, or government expenditure like the Sagarmala road building of 83,000 kilometers in the next few years? Because that costs, good that it is, it will create jobs and other things, but what worries all the rating agencies, and rightly so, is such projects are going to impact the fiscal deficit of the country. And why Moody's, S&P and everybody is worried about India and they don't take it to an A level or a higher grade is because of a high level of fiscal deficit. Even if the central government is 3.5%, if you take the overall as a country, we are in the range of 8 to 9% with the country, and that is considered unacceptably high.
Sure. Sure. Subhomoy, the government has said that the Moody's upgrade is a fitting reply to the government's critics, taking a pot shot at the opposition. Mr. Dua spoke about election season. Is the timing right as far as this report is concerned? In the sense, what I mean by that is, it's just happened days before the Gujarat election. So how is this going to benefit the government, if at all?
When Frank, when I went around UP after demonetization, it was pretty close to it, and that was much more close to the ground. It didn't seem to have much of an impact, in the sense that wasn't there in the reckoning of the voters. They basically, what they endorsed was lots of other issues, development and lots of things, but definitely not. Ratings upgrade is even further removed. So I wouldn't think this would be something that would be impacting the voters per se. I could be wrong, but I wouldn't think that that is something that really makes voters think about. They would be, as Mr. Dua pointed out, talking about GST, they would be talking about employment issues, health issues, lots of other issues. Ratings per se, it's something obviously the government needs to feel nice about. It basically, I would say, what the ratings does, all of these ratings, and of course here I'm talking to a veteran like Mr. Dua and Mr. Narayan, that the ratings action by these agencies, they basically look at stability of policies. Long-term stability of policies is what these companies, what these agencies look at. How has the fiscal deficit of India has performed for the last 7 years? It's been kept under very good, steady steering wheel. It hasn't been allowed to go out of whack. These, or the GDP, debt GDP ratio of India, which is now at 68% of national GDP. Now, these are the sort of things that the rating agencies look on positively. That, in fact, they look at this very crucially to see as a sign whether the government is on course for moving for whether we call it reforms or anything, to ensure that they're keeping their house in order. And if that is in order, it's then that the rating agencies move in to say, fine, we look at it nicely. And obviously, to the extent that it would affect employment going down, it would affect investment going down the line, those would have an impact, but those are second order and that would come much later. To answer on the Gujarat elections, I wouldn't say that that is something that would get impacted by this. The government, of course, has reason to feel pleased, and I said that is the reason why they should actually now redouble efforts to ensure that they stay on the reforms plank.
Sure. Mr. Narayan, as far as Moody's rating is concerned, it seems the rating seems to have overlooked some of the short-term uncertainties. So, do you believe that the worst is over for the economy?
I think when a system like Moody's gets into this projection, it is looking at a medium and a long-term policy perspective. It is looking at continuity of policy. It is looking at control over fiscal deficit. It is looking at interest rate policies. It is looking at whether there is an architecture that is being put in place that will help India go towards a growth path. And I think in all this, the unequivocal answer is yes. In the short term, yes, as Mr. Dua pointed out, yes, GST has caused some amount of disruption in the business, especially for the small and medium scale enterprises. But the important thing to see is government has gone about addressing it as quickly as possible. And the new rates that have been announced have considerably alleviated the pain, at least for the 28% sector. So I do think that this is also a fact that the rating agencies take into account, that how quickly does the government respond to signals about disruption and try to correct it. So I would say, yes, there will be short-term blips, would always be there in a large economy, a complex economy like India's. But I think the path that has been set for development and growth, I think that is what Moody's is looking at, and that is coming out to be a very, very positive signal.
Sure. Mr. Jindal, as an immediate impact of the news of the upgrade, we've seen the markets rallying, we've seen the rupee also appreciating. Is this going to continue in the days to come?
Yes, because it boosts the sentiments of investors that they are going in the right direction. And this is one reason that this shows the intent of the government and the capabilities of the government towards reforms. The pattern, one after another, they are able to do it, sustain it, and they are not disturbed by the noise created because of that. So all these things are required to boost the confidence, and that confidence, that sentiment is projected in the market numbers. like today's boost of 400 or 500 points in the Sensex, and Nifty again touched 10,300. So all this is because of boost of confidence, and this people see that it will still go further up, but temporary changes will always be there. Some up and downs will always be there. It may not be unidirectional, but more and more people are able, who are sitting on the fence, when they see such a action happening, they also come and they invest. So those things will definitely happen, and it clears the intent of the government that they are for these reforms and they are not worried about the noise, which is also very important. In the last 1 month, you must have seen lot of noise was towards GST alone, that this is not a right time and this was not done properly, etc., etc. But the true picture is that it is a very good reform. It was a must for it, inevitable. Only thing is, this pain was known. It may be little less, little more. It will wane out, it will fade out, and then you will see the results, real results in the coming. Moody's has also mentioned that 17, 18, 18, 19, they see the growth much more faster than what is happening now.
Sure. So, Mr. Dua, what does it mean for the economy?
For the economy, to my mind, two things. One, it is going to make, if we are going to be borrowing money, as every economy, growing economy like ours does, for us easier to borrow outside and cheaper for the per citizen in India, because if the government borrows at cheaper rate, the tax rates and other implications come down, because these are all to be paid back, etc. Second, a little relief, I would say, on the private sector investment cycle. The domestic investment, as we know, isn't happening much, so there may be a little more foreign investment coming in, which could give relief to the government, which was otherwise pump priming the economy in order to have the business growth, economic recovery. And finally, it might even mean the private sector gets spurred, saying if foreign investors are willing to take risks, why not us? Particularly, I say this in the context that many investors from many countries like Japan, they are invariably going for the model of a partnership with a local person, not necessarily investing on their own to take care of the local so-called environment, clearances, land, those kind of issues. So there could be a positive impact even on domestic investment.
Subhomoy, who stands to benefit the most? Who's going to be the biggest beneficiary of this upgrade?
Very interesting. I would think it is definitely the long-term investors who come in. See, I'll tell you what, ratings do not affect the equity market.
Yes.
It affects the bond market, it affects the debt market. Basically, most of the funds, the long-term insurance and pension funds, base their action for countrywide investment on what their reference, which is Moody's or S&P or Fitch, does. So all those funds which are got aligned with the Moody's weighted, if they see Baa3, then they automatically allocate that much amount of money to the country. So, and what are these funds? These are typically passive funds, the pension funds and insurance funds. Where do they typically invest in? Infrastructure, because these are long-term investments. That is why, in fact, the rating agencies are also conservative, because they want to tell these investors that you can invest here and it will be long-term stable and your return will be stable, which is why this sort of rating and that sort of a investment action has a strong correlation. So what you'll see is not that the equity markets will start to rise. I mean, it could, but then there are lots of short-term blips and other things which keep on happening. But what we'll see is FDI, long-term investors, even those who invest in the markets, but as you know, long-term players, that sort of a money would start coming in. So you'd see plenty of the foreign investment of that sort which comes in, which actually means very good news for a country which is infrastructure starved, because India has been selling its story of infrastructure investment, but now it becomes that much easier to generate funds for these investments from abroad. So that is where the real action would come from a ratings upgrade. Remember,
Sure.
this is also the year when China's rating has gone down.
Yeah, that's what I was going to come to. Mr. Narayan, can we say that the upgrade is even more significant because I think it was Moody's and another agency too, another ratings agency, which in fact downgraded China's sovereign rating a few months ago.
Yes, I do. If you really look at it, the concern in China is that, yes, they have serious debt problems. And even in the recent Communist Party conclave, this is an issue that was discussed fairly seriously. And there is a slowing down of the additional debt that the companies in China are incurring. So if you look at that and if you look at the opportunities here, debt restructuring, settling of debts, control over fisc, I think the rating agency would clearly see a distinct difference between the policies that is being adopted in China and in India. And as was said just now, this actually gives a great opportunity for people to invest in infrastructure. I do hope that this gives a fillip to private investors who would now be able to access funds, long-term funds, perhaps a little more cheaply than they could even a few months ago. And this could give a great opportunity for the large programs of road building and port building that the government have announced.
Sure. So private investment needs to pick up is what most of the consensus is on the program, because the government funds are being stressed at this point in time. I've got time for one final comment on the program. Mr. Jindal, close the show for us with your concluding remarks.
Upgradation also means higher valuation for the earlier investments. Each upgrade will increase the value of earlier investments from these people in the country. So this is from that point of view also important, that with upgrade they make additional income on that front also. So this environment and this boost after 14 years shows that there was a lot of mess to be cleared, but at the same time this has come rightly in time, and this will give a good boost to our economy and confidence which is required to go further ahead on this path.
Sure. One quick closing comment from you, Mr. Dua. How do we see private investment picking up in the near future?
I hope it's bottomed out, what we've seen, because we hadn't seen anything as low as this for about 20 quarters. Some people say 7 or 8 years.
Yeah.
I think this is a positive sign. So is the recent business ease of doing business index. But the most positive of these is, to my mind, is bank recapitalization, which has been done, which shows that the government is ready to take haircuts, being through its banking systems, etc., which people were not sure whether with the levels of accountability which the bankers have to go through, whether that was possible in a country like ours.
All right. On that note, then we'll have to call it a wrap on this edition of The Big Picture. I'd like to thank my guests, S. Narayan, Subhomoy, Bhattacharya, Ajay Dua and SK Jindal for joining me on the program and putting things into perspective for us. That's all the time we have today. See you again next time.